Hey, hello. This is Martin from Secrets, the channel for learning about trading and investing. Welcome to daily stock market analysis, where we look at the charts, technical charts, and try to understand what happened in the market during the day, and then try to learn something from it for a better trade plan for the next day. And tomorrow is a tomorrow is a holiday, truncated week is what we have ahead, and markets opens again on November 15th, Wednesday, and the analysis for the same. So we have another resistance day, another failed attempt to move up, right? Another bearish day, but not much, less than 0.5%. Let's get into the charts right away, and then we'll just wrap it up on this sheet, and then we'll go ahead. So here we have the Nifty chart that you see. Market did attempt to climb above the 50 exponential moving average. It has still not left the support. It's quite comfortably above the 20 exponential moving average and far away from the 200 exponential moving average. This is on the daily charts of Nifty that you see. And Nifty, you can see a red resisting right below the 50 exponential moving average, but still maintaining the cold 220 exponential moving average. Right, so market had corrected with sharp falls up to 79% on indices, and then nearly half, 4% or 3.5% kind of up move. An attempt to move above has happened, but since last several days, it's basically consolidating since 5 days. It's facing huge resistance, selling pressure, and then it's unable to conquer this 19,500 zone, and similarly this 44,000 zone, exactly where we are. And that's it. So if you look at the how the charts, we are in a trend line, and market hit resistance, and then the space above the trend line top begins at 44,200. That's the zone where it can move up still without actually being fully bullish. We can go up there, face resistance, and then get stuck. Or can break out. Look at this Nifty. What we saw earlier was Banknifty. Here, this is also having a beautiful parallel trendline channel with market attempting, facing resistance, and falling and consolidating since last entire day. And it may attempt to go further up and then conquer the 19,600 up to zones and then face resistance again. We also have the trend line that comes in from the all-time highs, touching the previous swing highs, and then so it has to clear that trend line resistance also, along with the moving average, 50 exponential moving average. And even after that, 19,850, 800, that zone would have the price action lower low, lower high. So until 19,800 is cleared, we are in trouble. Downside, we have a couple of gap resistances that has come in when the reversal took place a few weeks back, 2 weeks back, or a couple of weeks back, and that could act as supports downside. So Nifty, if you see, subsequent supports could be seen till the 18,800, which is a gap and a 20 exponential moving average and a trend and a parallel channel bottom. And above that you have 19,175 and 19,275. All these are gap supports and previous. And others, on the upside, you can clearly see that 500, 640, 50, 600, 700, likewise still 850. You have resistances all the way up, right? That's exactly what we are, right? We are at resistance trying to move above the 50 exponential moving average. That's exactly what we are. So today it was selling pressure again, another day of selling pressure, with Banknifty showing some performance better than Nifty, but finally it ended up flat. Nifty actually jumped above the 500 and then fell into resistance, and then went up less than 0.5%, much more than Banknifty. Double of Banknifty, it fell. So still constantly exponential moving average, so still below 200. Right, supports 19,500, 600 on the top. Resistance basically supports 200, 300, 19,000, 18,800. Likewise resistance 40 Banknifty 44, 100, 200, 500. Supports 43,500, 300, 40,000 down. Producing low. That's for bank fees. So as the momentum is falling, it's in sideways. It has climbed the sideways from the bearish zones. The trend remains mostly in the bearish zones, except for Banknifty showing some crossover still on the bull zones, but it's heading towards the bearish zones. So VIX is flat again once again, and you should be here with the VIX for market correction. VIX absolutely has no fear and greed. Probably volatility is a granular volatility, but otherwise VIX has been in this range of 10 and 12 since ages. Right? But the market does the correction, spikes up, goes down, spikes, all this happens, but VIX doesn't move more than 2. From 10 to 12, that's it. That's quite unusual considering all these years. So I'll be slightly cautious about that because it's in the bottom. The main road nature could give big spike ups of that could wipe out a capital if the push size is not right. So VIX is spiking, so market spiking up by about 15 to 20 that zones. Until then, this should be fine. You'll just have to handle the intraday volatility. So otherwise, global markets, some call off is there because the US markets indices are showing green. Crude has fallen. Dollar is spiking, but that's a really not great thing. Rupee being at the all-time low levels, but crude is compensating for that, and it's fallen substantially. US market is showing green. So overall, not that bad after the Fed non-hawkish talk or something, but some downgrade news has come in, so we'll have to see whether US markets how they react to that today. But otherwise, some green. Sectorally, if you see the metal sector has done well, otherwise all less than 0.5% of fall that happened right across sectors. No, only 2 sectors are leading. It's in the both zones and both time frames. That's a common reality. Open interest rate, if you see, it's not that its PCR is not bullish enough. It's 0.83 and 0.98 or something. So the edge, not bearish, not bullish either. Not bullish enough, I would say. This is the Nifty that you're saying. Huge resistances exist at 19,500 zones. Similarly, the Banknifty huge resistance exists at the 44K zones. Highest resistance as of now. Still, we have holiday tomorrow. Left tomorrow, Monday, Tuesday. So just last 2 days of the expiry. Weekly expired for the 15th and Banknifty and 16th on Nifty. So as of now, the level shows this 9,400, 400 as having great resistances. That's it. So it is not time for the traders to be non-cautious. It is time for traders to be cautious actually, because whether the trend has not emerged. It's sideways, it's consolidating, it's showing industry candles. It's up and down. It doesn't say that it's charts does not say it's bullish at price action is not saying that, momentum is not saying that, same time it's not saying it's some bearish either. So it's sideways. How long this sideways moves, it can go for years or it can go for months, or it can break out in a matter of days. So but it's very difficult to predict that, but all you have to do is cut short the position size if it's in threat. Once the trend emerges, follow the trend and take the bets. Non-directional also. The range of the explosion on either sides is known to us. So, based on the levels and the probability studies on the open interest and the chance, you just have to take the positions in non-directional as well. So, and the investors on the other hand, it's an opportunity to buy in if there is a dip that's coming, buying quality stocks, because our markets have not performed much in the last 2 years. So, there is scope for a breakout on the upside mostly. The markets fundamentally is just being volatile ahead of the elections, and there is some upside that could happen pre-election, the Lok Sabha elections, and post-election as well. At the interim, there will be state elections that may be making volatile probably. Eventually, it's going to go up because given the fact that it has not performed last 2 years much. So that's a view. So tomorrow is a holiday, and good luck, happy trading, happy learning, happy investing for the day after tomorrow's trade. Share it to friends and colleagues. Subscribe if you're not subscribed, and share it to friends. So it reaches out to more. Thanks for watching. Happy trading, happy learning, happy investing. Bye.